Gold may be continuing its march beyond $4,100 again, driving interest in producers higher. But there still seems to be a backlog of projects and potential mines out there that, quite frankly, don't need gold to be anywhere near current price levels to pencil out. Case in point is the Coka Rakita project in Serbia, currently being developed by DPM Metals. This is a project that has gone from discovery to feasibility study in just 36 months' time. And well, it's looking like it will be a moneymaker. The economics are so favorable here that the latest feasibility study was conducted at just $1,900 an ounce gold. And the internal rate of return is still estimated at 36%. And all-in sustaining costs are expected to be in the lowest quartile of mines globally. As one market commentator put it, just build it already. Let's dive in. DPM Metals has completed a feasibility study on the Coka Rakita project, which follows the completion of a pre-feasibility study in December of last year, meaning things are moving at a fast clip here. Of course, several improvements were made over the last 11 months as the project progressed, with the latest economic study seeing an additional year of mine life added to the proposed mine. Well, gold production is now expected to be higher in the first 5 years of mine life, which of course has resulted in improved economics for the project as a whole. For comparison purposes, DPM Metals has kept metal price assumptions consistent from the PFS to the FS, which remains at $1,900 an ounce gold. Under the PFS, Coka Rakita was said to have a net present value of $735 million, alongside an IRR of 41% and a payback period of 1.7 years, which was based on average annual production of 147,000 ounces over the life of mine, with the first 5 years of operation expected to average 170,000 ounces. Life of mine was estimated at 10 years in total. However, processing was only to occur for 8 years. 11 months later, economics have improved a bit, resulting in a net present value of $782 million under the feasibility study, while the IRR has slipped slightly to 36%, while payback edges up to 1.8 years. That figure is based on a life of mine of 10 years, with average annual production of 148,000 ounces of gold, although production is much more front-end weighted under this scenario, with the first 5 years expected to average production of 189,000 ounces of gold. But this appears to be just the start for the Rakita camp. Commenting on the feasibility study results, DPM CEO David Ray commented that Coka Rakita is a pivotal stepping stone that unlocks the broader potential of the Rakita camp. 3 mineral resource estimates within the camp are expected to be released by year-end, with all 3 of those deposits within 2 kilometers of the infrastructure planned to be constructed here. So that initial mine life is just that, a starting point. All right, let's get into some of the details here. What's being proposed here by DPM is an underground mining operation, which is 35 kilometers by road from the city of Dore in Serbia and is within proximity to DPM's Chelopech mine. Mining is to take the form of long-hole open stoping with cemented paste backfill, with mineralization to be accessed via 2 declines and a spiral ramp that will be used to truck mine material to surface. A high-grade core is to be prioritized in the initial years of operation to enable a quick payback period on initial capital, with grades expected to average 8.1 grams per ton over the first 5 years. Over the life of mine, grades are expected to come in lower at an estimated 6.44 grams per ton gold, with average mining and processing rates of 850,000 tons per annum. The processing flow sheet, meanwhile, will see crushing and grinding occurred, followed by gravity concentration and sulfide flotation. Gravity concentrate will be sold directly to gold refineries. However, a portion of it will be smelted and sold as dore by DPM. The sulfide flotation concentrate, meanwhile, is said to be suitable for processing by smelters in the region. In total, 27% of gold produced is expected to take the form of dore, while gravity concentrate will consist of 16% of production and flotation 45%, with recoveries expected to average 88% over the life of mine. Tailings, meanwhile, will be split between paste backfill and a dry tailings storage facility on site. As for costing, initial capital costs are pegged at $448 million, which is said to be well within DPM's funding capacity. The figure, however, is the reason for the IRR dropping from 41% to 36% from the pre-feasibility stage to the feasibility stage, with initial capital under the pre-feasibility study estimated at $379 million. That $448 million estimate includes direct costs of $331 million, $129 million of which is attributable to mine development, and $68 million to infrastructure, alongside indirect costs of $73 million and a contingency figure of $44 million. Sustaining capital expenditures, meanwhile, are estimated at $32 million, or $3.2 million per year, and closure costs at $30 million. At the end of Q3, DPM comparatively had $414 million in cash on hand, no debt, and a $150 million revolver available for drawdown, plus cash flow from current mining operations, meaning that this project is in fact internally fundable. On a per ounce basis, cash costs are estimated at just $538 on a per ounce basis, versus $596 an ounce under the pre-feasibility study. While all-in sustaining costs are unchanged at $644 an ounce, which places the project in the first quartile of costing on an AISC basis. Comparatively, DPM in the third quarter posted an average AISC of $1,168 an ounce in Q3 on a consolidated basis. Broken out, Chelopech had an AISC of $671 an ounce, and Ada Tepe an AISC of $1,030 an ounce. Vares was not included in the mix as a result of still being classified as pre-production. It should also be noted, however, that by using an average price of $1,900 an ounce gold, expected royalties on a per ounce basis are lower, skewing numbers in DPM's favor. A 5% net smelter return royalty is in play here, and that has an impact as the price of gold rises. For comparison purposes, other names in the low-cost quartile include First Mining's Springpole project, which just outlined an AISC of $938 an ounce at $3,100 an ounce gold under a pre-feas. G Mining's Oko West project at an AISC of $1,123 at $2,500 an ounce gold under a feasibility study, and Aya Gold's Boumadine project at an estimated AISC of $1,021 an ounce based on $2,800 gold. So where does DPM go from here? Well, a key permitting milestone was achieved at Coka Rakita in November, when the project received approval to begin a special purpose spatial plan. The overall permitting approval process is said to be ongoing, with most of the baseline studies for environmental and social impact assessments now completed. As it stands, technical work is advancing and construction is expected to begin in early 2027, with early works expected to begin in the second half of next year. First ore, meanwhile, is expected to come to surface in the second half of 2028. With a buildup of a stockpile expected to allow for a smooth ramp-up at the processing plant. First concentrate production, meanwhile, is expected in the first half of 2029, although the company has stated that they are taking what opportunities they can to advance that schedule where possible. All right, so let's wrap it up. First and foremost, let's take a second to tip our hat to DPM Metals. Moving from discovery to feasibility study in 36 months is quite simply impressive. If production arrives by the first half of 2029, roughly 7 or so years post-discovery, that means DPM has moved from discovery to production in approximately half the time that is typical in Western nations, which is incredible. Mix in the positive economics here, low cost of operating on a per ounce basis, and the fact that it looks like no onerous construction funding is needed, and well, it sounds almost too good to be true. Sometimes everything aligns just right, and this looks to be such a case. All right, everybody, thanks for watching. If you have thoughts on this project, let us know in the comment section. Also, if there's stories you want us to cover, as always, we are open to ideas. Just let us know in that comment section. If you enjoyed this video, do me a favor, smash that like button, subscribe, and ring that notification bell. Also, lastly, if you want more mining content, check out our website over at thedeepdive.ca. All right, everybody, thanks for watching.